Today I'm going to solve a problem for you, and the problem is this: how to stop getting out of trades too soon. By the way, this is part 2 of a series, and then there are 2 types of exits. So exit number 1 was covered in the first video, and this one I'm going to give you a second type of exit, and it's more advanced. This exit I'm going to share with you is not known by very many people at all. In fact, I never hear anybody talk about this. But you're going to get it today, and I use this myself in my own trading. So, first of all, what we're using is Heiken Ashi bars, so that's the first thing to know. We're not using regular, traditional Japanese candlesticks. Heiken Ashi bars are a variation of Japanese candlesticks. Now, the advantage is here I've got on the left side, I've got our Heiken Ashi bars, as you can see there. And over here, it's just a regular 2-minute Japanese candlestick. And as you see, we get, well, let me do it this way. So as we go down, we get, with the traditional Japanese candlestick bars, we get some green bars in here. And this is where indecision would come in, and where the trader's mind would have doubts and hesitation and say, I don't know. Should I stay in or should I get out? Should I exit? I don't want to get back profits, but on the other hand, there's going to be more money. I want to get that more money. And that's the problem. And we solve that problem. One of the ways we solve that problem is with Heiken Ashi bars, because look, this is the same period of trading, but all through this time, the bars stay red. So super simple. I love making things simple in trading. And you know, that's the thing, is a lot of people think trading has to be complicated. It really doesn't have to be. In fact, if your trading is complicated, you're probably on the wrong path. Trading is actually pretty darn simple. So in this case, we're going to use this tool to just make the bars red, and we stay in when they're red. And therefore, we don't have the psychological points of decision here when they turn green. I can just stay down, 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 stay short, 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 short. Okay, now, why do Heiken Ashi bars do that? I like to not only teach you the technique. Whenever I teach, it's very important, this is part of Top Dog Trading, is that I always educate you on what you're trading. I want you to understand it. I want you to be educated. I want you to be empowered with the information. So we're looking over here at Investopedia. You can check this. By the way, this is a great site to look up anything as far as indicators, etc. Here is the super simple formula for Heiken Ashi technique. And as you can see, I'm not going to say all of this out loud, but it's simply that. So if you'll just memorize that real quick, this whole formula, I'll just take about 5 seconds to memorize that, and you'll have it forever. Okay. So as you can see, that's not so simple, but that's one of the beautiful things about having coding and having algos, is that we could take this complicated stuff and put it in the background and then just have it simply plotted on our charts. The one thing that I want to point out as far as explanation goes, without going into all the details, is that you'll notice here that the 4, the 2, the bottom line is that it is combining 2 bars together. And that's what causes the smoothing. So each bar of the Heiken Ashi bars is not really the high, open, low, and close of the day or of that 2-minute chart. For example, let's go back to the charts. Normally, if it was a traditional candlestick bar, this would be the open. Well, that'd be the open and the high. This would be the low, and that'd be the close of the day. But with Heiken Ashi bars, that's not, because it's combining this time period and the previous one together. And that's what creates a smoothing, and that's what allows you to eliminate the noise of these little green bars that pop up, and allows you to stay in the trade longer. It makes it visibly more obvious. So very important point on this, though. This is why you need to be educated on this. You cannot trade based on the open, high, low, and close of a Heiken Ashi bar, because it is not the actual open, high, low, close of the market. So I always like to have a traditional Japanese candlestick bar chart next to me, and I'm trading off of that, using that for my entries. let's finish up with the secret sauce that I promised you on the extra advanced technique for getting out of trades using Heiken Ashi. So going from green to red or red to green, yes, that is one technique. Everybody in their gerbil knows about that one. Let's look at the advanced one. So here we're moving up with green bars. Let's take it bar by bar like we would see it on the hard red edge of the screen in real trading. Still going up, green. Still going up, green. Cool. Still going up, green. So what are we doing? We're staying in, right? We stay long. No reason to get out. Heiken Ashi is telling us, yep, stay in. And then we go, uh-oh. Okay, that's our exit signal. Now you might be saying, but Barry, the bar didn't turn red yet. Right. This is the professional way to get out before it's obvious to everybody and their parakeet and their gerbil and their hamsters. Because most amateurs are looking for it to turn red. And that's not bad. And sometimes that's cool. That's good. But you can sometimes get out earlier and therefore lock in more profits by using this advanced technique. So let me spell it out. Actually, let's go forward and see what happened here. Yeah, now it turns red. So see, now you would have given back more money. And then just for giggles, let's see. Yeah, see, it comes all the way back down. All right, so what is this pattern? This is a specific pattern. Here's the technique. The technique or the pattern on it is this. So within that Heiken Ashi bar, we want to see, and when it's moving up, we want to see a long wick on the top. When you see a long wick on the top, that's when we get out. And when I define it as a long wick, how do we define a long wick? Now, we need a very clear mathematical number there, and the number is 50%. Between the low and the high of the bar, if the upper part of the green body is lower than 50% between the low and the high, that's when I get out. That's an exit bar. That's an exit bar. Now, so it's still green and we're able to get out earlier. So that's the pattern. This technique appears some of the time, but not all the time. If you want a technique for getting in and out of the markets that occurs a lot of time, all the time, more often than this, then you want my market timing indicator, and you don't need Heiken Ashi bars or anything special for that. In fact, it works on any charting platform out there, and I give it to all my viewers for free, and you're a viewer, so you get it for free. Just go to indicatorwebinar.com. I give you that an indicator for specific entries to the penny, to the pip, to the tick. It's super accurate. I use this on every single trade I personally take every day. And I show you how to trade it. Thus, indicatorwebinar.com. It's a recorded webinar. It's not live, so you can watch it anytime, day or night that you want to. And like I said, I like to educate you on why things work. So I will actually be explaining to you the logic behind it so that you can trade it with confidence, knowing, oh, there's a logic behind why this nails cycle lows for longs and nails cycle highs for shorts. So go get it. My gift to you.